Hello viewers, welcome to my channel. I'm Hashim. Now I'm going to start the problems on admission of a partner. So far, 6 problems I have completed on preparing the profit and loss appropriation account, capital account, current account. From now onwards, we have the problems on admission of a new partner. So what are the adjustments to be made whenever a new partner is admitted in a partnership firm? So from this problem onwards, we are going to study the adjustment. Now, before that, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep it ready and take the screenshot of the points which I have written on the board. Then I'll explain every problem in detail. Now, see the 7th problem, problem number 7. Shravan and Swarup were sharing profits and losses in the ratio of 7:3. 7 by 10, 3 by 10. That is the profit sharing ratio between Shravan and Swarup. They were to admit a new partner and decided to introduce the following changes in the books of accounts. So before introducing a new partner, some adjustments have to be made in the accounts. So what are the adjustments to be made? First, distribution of general reserve of 20,000. So before admission of the new partner, in the balance sheet, general reserve was there. And this general reserve is the accumulated profit. It will be shared by the old partners in the old profit sharing ratio. That is 7:3. So general reserve will show credit balance. Now if you want to close it, you have to debit. So general reserve account should be debited and old partners capital account should be credited in the old profit sharing ratio. Next one is revalue and alter the book value of furniture to 8,800 from its present book value of 10,200. So presently furniture value was 10,200. Now they want to bring it down to 8,800. That means 1,400. 1,400 is the reduction in the value of furniture. Furniture is an asset. It will show debit balance. Now if you want to reduce it, furniture account should be credited. And a new account is opened called revaluation account. So entry will be revaluation account debit, furniture account credit. By passing this entry, the value of furniture will come down. Next one is decrease the provision for doubtful debts from 6,000 to 4,500. There was a provision for doubtful debts for 6,000. Now they want to reduce it to 4,500. That means 1,500 provision should be reduced. Now remember, provision for doubtful debts will show credit balance. If you want to reduce it, debit the provision for doubtful debts. Entry will be provision for doubtful debts account debit, revaluation account credit. Then record the newly admitted claim of 9,000 payable to employees as bonus. There was a new liability. This liability was not there in the balance sheet. Now they want to record a new liability. All liability will show credit balance. Now we have to credit. This claim payable to employees, that's a new liability that will be created. Revaluation account should be debited. Write off 3,000 from the book value of building. That means we have to reduce the value of the building. The building will show debit balance. If you want to reduce, credit building, debit revaluation account. Write the journal entries for the above and prepare the revaluation account and also general reserve account. So 3 things we have to make. First journal entries, then revaluation account, then general reserve account. These are the adjustments to be made. So my suggestion to my viewers, always keep a notebook, calculator, pen ready. So whenever I explain something important, immediately you record it. Maintain a running notes. Then only you can be able to get a good command quickly on this topic. So first of all, journal entries. There was a general reserve for 20,000 which will be shared by the old partners. Entry will be general reserve account debit 20,000, to Shravan's capital to Swarup's capital. How we got this 14,000 and 6,000? The profit sharing ratio, that is given as 7:3. So 20,000 into 7 by 10, you will get 14,000. 20,000 into 3 by 10, you will get 6,000. Now narration, I am not writing the narration here, but in examination you must write. Being the general reserve shared by old partners in old ratio. That's it. Now secondly, furniture. The furniture value was given in the problem as 10,200. Now we want to reduce it and make it 8,800. That means 10,200 minus 8,800. You will get 1,400. 1,400 rupees you have to reduce from furniture. Entry will be revaluation account debit, furniture account credit. Being the value of furniture reduced. Next one is provision for doubtful debts. Actually provision for doubtful debts 6,000. Now we have to make it 4,500. We have to reduce. In order to reduce the provision, debit the provision. So entry will be provision for doubtful debts account debit, revaluation account credit. 1,500. Next one is record a newly admitted claim of 9,000. A new liability we have to record. The entry will be revaluation account debit, claim payable, bonus payable to employees, that will be credited. Being a new liability brought into books. Now next one is write off 3,000 from book value of building. From building 3,000 rupees we have to decrease. The building will be credited. Debit will be given to revaluation. Entry will be revaluation account debit, building account credit. Being the value of building decreased. So whatever adjustments are given, we have passed the entries for the adjustments. Now after completing this fifth entry, we have to see whether there is profit or loss on revaluation. You should not pass this entry. Only after preparing revaluation account, then only we can be able to know whether there is a profit on revaluation or a loss on revaluation. Now we have prepared the revaluation account. Each entry from first entry to fifth entry, we have to post this into the ledger account. The first entry, general reserve account debit to Shravan's capital to Swarup's capital, but there is no revaluation in the first entry. Leave it. Second entry, revaluation account debit, furniture account credit. The revaluation account is debited. The debit side to furniture 1,400. Entry posted. Now profit and loss account debit, provision for doubtful debts account debit, revaluation account credit. So credit side by provision for doubtful debts 1,500. Next, revaluation account debit, bonus payable credit. The revaluation account is debited. The debit side bonus payable 9,000. Last entry, revaluation account debit, building account credit. The revaluation account debit side, building 3,000. So we have posted all the entries. Now if debit side is more, there is a loss. If credit side is more, there is a profit. So if you observe here, 1,400, 9,000, 3,000, 13,400. The debit side is more. Credit side only one item is there 1,500. So the total is 13,400 minus 1,500. You will get 11,900. This is the loss on revaluation. Loss on revaluation. So here credit side is less. That means we have to credit revaluation account. Debit should be given to partners capital account. So entry will be Shravan's capital account debit, Swarup's capital account debit to revaluation. How much is the loss? 11,900. So here Shravan's capital account debit, Swarup's capital account debit, revaluation account credit. So by crediting this, revaluation account will get closed. The amount is transferred to capital account. In which ratio? In the old profit sharing ratio 7:3. 7 by 10. 11,900 into 7 by 10. You will get 8,330. Similarly, 11,900 into 3 by 10. You will get 3,570. That's it. These are the entries and this is the revaluation account. It is also asking you to show the general reserve account. So this is the general reserve account. How much was the balance in general reserve given in the problem? General reserve shows a balance of 20,000. So credit side by balance brought down 20,000. This is the balance. Now this is shared by the old partners. Entry will be general reserve account debit to Shravan's capital to Swarup's capital. So here you should write to Shravan's capital 14,000 to Swarup's capital 6,000. So this general reserve account is closed, shared by the old partners. Finished. So this is the first problem on admission of a partner. What are the adjustments to be made when a new partner is admitted? That's all. Now I am going to explain you about this eighth problem. See the eighth problem. Sandeep and Pradeep are partners sharing profits in equal proportion. That means whatever profit or loss is there, that will be shared equally by Sandeep and Pradeep. The following is the balance sheet of the firm as on 31st March 2009. Liability side capital Sandeep 1 lakh, Pradeep 90,000. Creditors are 80,000, creditors 80,000, salary outstanding 28,000. So total of liability side 2,98,000. Asset side building, furniture, investment, stock, bills receivable, sundry debtors 84,000 less provision, that is provision for doubtful debts is 8,000. Cash at bank, cash in hand. The balance sheet is tallied 2,98,000. Before Navdeep joined as partner, the following adjustments were to be made. A new partner Navdeep, he is going to be admitted. So before the admission of Navdeep, the old partners Sandeep and Pradeep wants to make some changes in the assets and liabilities. Provision for doubtful debts to be raised to 13,000. So before admission, how much is the provision? See the balance sheet. Provision was 8,000. Now it is asking you to raise the provision for doubtful debts to 13,000. From 8,000 to 13,000. The 5,000 rupees provision for doubtful debts has to be increased. Remember, provision for doubtful debts will show credit balance. Now we want to increase it. So again we have to credit provision for doubtful debts. Entry will be revaluation account debit, provision for doubtful debts account credit, 5,000. Earlier it is 8,000. Now we have to increase by 5,000. So it will become 13,000. Building and furniture are revalued at 80,000 and 9,000 respectively. Building is to be revalued at 80,000. What is the balance sheet value of building? 74,000. From 74,000 we have to make it 80,000. That means 6,000 rupees building value has to be increased. So we have to debit building. In order to increase the asset, debit the asset. So building account debit, revaluation account credit 6,000. And furniture 9,000. The balance sheet value of furniture is 10,000. That means you have to reduce the value of furniture by 1,000. If you want to reduce the asset, credit the asset. Entry will be revaluation account debit, furniture account credit, 1,000. Then a claim of 3,000 by an ex-employee of the firm is to be admitted, a new liability. A claim has arisen, but it was not recorded in the balance sheet. Now we have to record a new liability. Liability will show credit balance. So claim payable is a liability. So entry will be revaluation account debit, claim payable account credit, 3,000. Then pass journal entries and prepare the revaluation account and balance sheet after giving effect to the above before admission of Navdeep. So we have to pass the entries, we have to prepare the revaluation account, and we have to make the balance sheet after making all the adjustments. First of all, we'll pass the entries. The first entry is regarding provision for doubtful debts is to be increased. So entry will be revaluation account debit, provision for doubtful debts credit. By how much? 5,000. From 8,000 we have to make it 13,000. So 5,000. Being the provision for doubtful debts increased from 8,000 to 13,000. Secondly, building account has to be increased from 74 to 80,000. So 6,000 rupees we have to increase the value of the building asset is increasing, debit asset. Building account debit, revaluation account credit. Building account debit, revaluation account credit, 6,000. Being the value of building increased. Furniture, the balance sheet value 10,000, but the present value make it 9,000. That means 1,000 rupees we are reducing the furniture. The furniture should be credited. Asset, if it is decreased, credit. If the asset increases, debit. So here furniture value is decreasing. So credit furniture. Revaluation account debit, furniture account credit. Revaluation account debit, furniture account credit, 1,000. Being the value of furniture decreased. Last one is a new liability, claim payable. Liability will show credit balance. The claim payable should be credited. Revaluation should be debited. So entry will be revaluation account debit, claim payable credit, 3,000. Being a new liability brought into books. That's all. All the adjustments we have done. Now before passing the last entry, first we have to make the revaluation account to find out whether there is profit or loss on revaluation. By posting all these entries 1, 2, 3, 4. So here you can say revaluation account. Posting, simple posting. First entry, revaluation account debit, provision for doubtful debts credit. The revaluation account is debited. So here you can see to provision for doubtful debts 5,000. First entry posted. Second entry, building account debit, revaluation account credit. So credit side by building 6,000. 2 entries posted. Third entry, revaluation account debit, furniture account credit. So revaluation account is debited to furniture 1,000. Last entry, revaluation account debit, claim payable account credit. So revaluation account debit side, claim payable 3,000. Over. All the 4 entries we have posted to revaluation account. Now we have to see whether there is profit or loss on revaluation. If debit side is more, there is a loss. So here 5, 6, 7, 8, 9. 9,000 is there on debit side. But credit side only one item 6,000. So 9,000 minus 6,000. The balancing figure is 3,000. This is a loss on revaluation. So revaluation account credit side loss. That means revaluation account is to be credited. Debit should be given to the old partners in the old ratio. The loss was 3,000. It is given in the problem. The profits and losses are shared equally. Half. The half of 3,000, 1,500. 1,500 should be debited to Sandeep's capital. 1,500 should be debited to Pradeep's capital. So here the entry is Sandeep capital account debit 1,500, Pradeep capital account debit 1,500 to revaluation account 3,000. Being the loss on revaluation shared by old partners in the old ratio. That's all. So revaluation account completed and the revaluation account is completed, general entries are completed. Now the capital will change. The old capital, before making all the changes, the capital of Sandeep was 1 lakh and Pradeep was 90,000. From that, we have debited here. So better we make the partner's capital account. In the partner's capital account, by balance brought down. Before making adjustment, Sandeep's capital was 1 lakh, Pradeep's capital was 90,000. Now we post this last entry. Last entry, Sandeep capital account debit, Pradeep capital account debit. Both the capital accounts should be debited, revaluation. So here, debit side to revaluation loss 1,500, 1,500. We have posted this last entry. Now find out the balancing figure. Now credit side 1 lakh. 1 lakh minus 1,500, 98,500 is the capital of Sandeep after adjustments. Similarly, before adjustment, Pradeep's capital was 90,000. So 90,000 minus 1,500, 88,500 is the capital of Pradeep after adjustments. This is the new capital brought down. This is carried down, this is brought down. 98,500 capital of Sandeep and 88,500 is the capital of Pradeep. That's it. Now it is asking you to make the balance sheet after making all the adjustments. Here is the balance sheet. Liabilities, assets. Liability side, capital. Sandeep capital 98,500. See here, from this account I have taken. Pradeep capital 88,500. There is no adjustment regarding creditors. Whatever creditors are there before adjustments, the same creditor. We have not adjusted these creditors in any of the entries. So we'll take the same amount. Outstanding salary, same amount. Whatever was there before adjustment, the same outstanding salary 28,000. But a claim payable was not there in the old balance sheet. In the balance sheet, claim payable was not there. A new liability has been brought into books. So here we have passed the entry. Revaluation account debit, claim payable, a new liability. How much? 3,000. So here claim payable 3,000. Liability side over. Now come to asset side. Building value was 74,000. But we have increased the value of building by 6,000. Building account debit 6,000. So 74,000 plus 6,000 is 80,000 is the new value of building. Furniture value in the balance sheet was 10,000. But we have decreased the value of furniture by 1,000. We have credited furniture account by 1,000. So 10,000 minus 1,000, 9,000 is the value of furniture. No adjustment regarding investment stock bills receivable. We have not passed any entry for investment stock bills receivable. Same balance sheet values. Investment 40,000, stock 40,000, bills receivable 34,000. Same items are taken. Regarding sundry debtors were 84,000, but provision for doubtful debt was 8,000. We have increased the provision up to 13,000. It is asking you. The new provision is 13,000. Out of 13,000, 8,000 was already there. 5,000 we have passed the entry. Revaluation account debit, provision for doubtful debts 5,000. So 8 plus 5, 13,000. So 84,000 minus 13,000, 71,000 is the sundry debtors after provision. Last two items, cash at bank, cash in hand. There is no change, no entry regarding cash in hand, cash at bank. So 20,000 cash at bank, cash in hand 4,000. Now we have prepared the balance sheet. Now simply calculate the total on the liability side and the total on the asset side. So liability side total you are getting 2,98,000. Same 2,98,000 we got it on asset side. That means balance sheet is tallied. So correctly we have passed the entries. We have prepared the ledger accounts, that is revaluation account and partners capital account, and finally we have prepared the balance sheet. So in this video, two problems I have explained you, 7th and 8th. How the adjustments should be made whenever a new partner is admitted. Remember one point, if you want to increase the asset, debit that asset and credit revaluation account. If you want to decrease the asset, debit the revaluation account and credit the asset account. Similarly, if you want to increase the liability, credit liability, debit revaluation account. If you want to decrease the liability, debit liability and credit revaluation account. So after making that revaluation account, you have to find out whether there is profit or loss on revaluation, and that profit or loss on revaluation will be transferred to old partners capital account in the old profit sharing ratio. That's it. So 7th, 8th problem we have completed. Now 9th problem inshallah will take up in the next video.